Hello everyone, I think people are still joining in, but we are ready to start. So welcome to this webinar on Green Bonds for Cities, organized by the Climate Bonds Initiative and the City of Cape Town with the support of Climate Kit. Just a few housekeeping rules before we start. The webinar will last for 1 hour. There will be presentations from myself. My name is Diletta Giuliani. I work in the Policy Department at the Climate Bonds Initiative, and I will also be joined by Daniel Sullivan from the City of Cape Town. The webinar will end with a Q&A session, so please do insert your questions in the Q&A box as the webinar goes through. You can find that box in the top right-hand corner, and you can just write in the questions as we go along with the presentation. Just to give you a brief overview of who we are. So the Climate Bonds Initiative is an investor-focused, not-for-profit organization with a mission to mobilize debt capital markets for climate solutions. Over the past few years, our focus has been on the green bonds market. We try to mobilize domestic markets by working with governments, regulators, and other market participants. We inform the market by tracking its growth and providing data analysis. We try to protect the market and develop it in a standardized way through the Climate Bond Standard and Certification Scheme. And finally, we cooperate by connecting with our partners. You can see on the slide, our partners range from large underwriters and law firms to investor groups and green bond issuers. So in this webinar, we will have a look especially at the opportunities for cities to issue green bonds. We will have an overview of what green bonds are and what the opportunity is for municipalities. We will then be looking at the City of Cape Town's first green bonds and their very successful issuance in July earlier this year. The session will then close with a Q&A, so questions from you on what we present today. So what are green bonds? A green bond is just like a traditional bond, so a debt instrument that can be raised by any entity. This can be a government, a development finance institution, corporates, asset owners, and of course also municipalities, local utilities, and public authorities. The main difference between a traditional bond and a green bond is the fact that for a green bond, the proceeds or the money raised through the bond issuance are directed only at green projects and assets. As for traditional bonds, these can be both new projects, but also the refinancing of existing projects. Green bonds are also characterized then by an additional level of transparency, where the issuer discloses which green projects and assets it is going to finance. They are often accompanied by an external review that verifies the green credentials of the bond. And issuers are also asked to then report on what they have been spending the money raised on. And this is also that investors that buy the green bonds feel comfortable that their investment is in fact going to environmentally beneficial projects. So green bonds can finance a really large variety of sectors. The bulk of green bonds goes to finance climate change, adaptation, and mitigation. But green bonds can also finance other environmental priorities such as pollution, biodiversity, and land preservation. In terms of climate change, adaptation, and mitigation, the main sectors that we have seen green bonds being used for are renewable energy efficient buildings, low carbon transport. This includes rail, electric vehicles, bus rapid transit systems, and metro systems. We have also seen several bonds for sustainable water management and water infrastructure, as well as waste and pollution management. We are yet to see green bonds issued for ICT and broadband, but we think this is an important sector and we will be seeing some soon. So why has this market developed, and why has it grown so much? What are the key benefits for investors and issuers? So what we have found by speaking with market participants is that issuers have several benefits. These include investor diversification. So when an issuer issues a green bond, they can attract demand from dedicated green investors and social responsible investors. They benefit from internal collaboration, meaning that for the first time, the Treasuries and sustainability departments are called to work together. This creates both a sense of purpose inside the organization and also helps raise the issue of sustainability and sustainable finance in the institutions. Issuers that come to the green bond market are, of course, seen as leaders in the sustainable finance space, and they have, as a result, an enhanced reputation, which obviously they can use in their marketing purposes. For investors, green bonds are an easy way to receive the same returns, but invest in environmentally friendly projects. Green bonds are also important for portfolio diversification, so that investors can hold a variety of instruments in their portfolios. By investing in green assets, investors are also hedging themselves from some of the risks that may come from climate change and also from policies that aim at decarbonization. For investors that have long-term liabilities, such as pension funds, green bonds can be a good instrument to match to their liabilities. So investing in long-term sustainable infrastructure can be a good strategy to be able to repay investors back. So investors have been calling for standards and assurance of green bonds. As we have noted, an important part of this market has been the transparency attached to the funds that are raised through these instruments. At the international level, we have 2 points of reference that have developed. Firstly, the green bond principles, which rest on 4 pillars, and they prescribe the transparency around the use and management of proceeds. They include broad categories of what is considered green and recommend an external verification, such as second-party opinions. This is a one-step verification process that the issuer undertakes before it issues its bond. The Climate Bond Standard that we coordinate here at the Climate Bonds Initiative incorporates the 4 pillars of the Green Bonds Principles, but also adds science-based definitions of what is green. Through technical and industry working groups, we develop sector criteria, which include specific threshold requirements to ensure that assets are compliant with the Paris Agreement and therefore a 2-degree pathway. To apply the Climate Bond Standard, we coordinate a system of verifiers that we approve, we train, and we check upon. The Climate Bond Certification is a 2-step process. So the issuer is both verified before the bond is issued, so to ensure that the systems are in place for the green bond issuance, and also after the bond is issued, to make sure that what was said before the green bond was issued is actually happening. So let's have a look now at green bonds for cities. What are they and what do they mean for the development of low carbon and climate resilient urban infrastructure? So a green city bond is just a green bond that is issued by a city or a municipality or a state government. These are not the only entities that can issue green city bonds. There is also the case of public utilities, local transport authorities, and other domestic companies. Green city bonds have been a way for these entities to access local financing from the capital markets for low-carbon urban development. There is an increasing pressure on these on cities and these other market participants to develop sustainable and livable cities. Cities are, of course, at the center of the climate change action, being both the center of emissions, but also the centers that are most affected by climate change. And as cities grow and populations keep concentrating in these spaces, there is a need really to develop infrastructure projects that are both low carbon and climate resilient. Green bonds can therefore help to understand what type of infrastructure be developed and redirect funds towards that infrastructure. This obviously includes, as we have seen already, low carbon transport, so we're thinking here of mass transit systems, so metro, bus rapid transit, light rail, and then of course water and sewage system, waste treatment, as well as energy efficient buildings and smart energy solutions. To date, green bonds for cities have been, as you can see from the pie chart on the top left-hand corner, have been used mainly to finance water and clean transport assets. Following that, they have been used for low-carbon buildings and renewable energy and other assets as well. We expect especially the transport segment to grow over the next few years. In terms of the geographies, you can see from the chart on the bottom right-hand corner that not only has the market been growing over the past few years and therefore contributing to the overall global green bond market growth, but in particular it has been diversifying. So the largest country of green city bond issuance is the United States. This is also simply because this is where the largest municipal bond market resides in general. But we have seen other countries come to market, and especially encouragingly, I think you can see the difference from 2014 to 2017 is that we have a lot more participants from the emerging markets. So we have South Africa, Mexico, and Argentina join the market in 2017. So what are the steps to issuing a green city bond, and is it very different to issuing a traditional bond? So there are a few additional steps to issuing a green bond, and of course these are to ensure that the issuance is aligned with best market practices and that all the correct instruments are in place for the investors to feel comfortable to buy it. So the first crucial step is of course to identify the qualifying green projects and assets. These can be found, for example, through the Climate Bonds taxonomy or in line with a city's own climate ambitions. The second step is to arrange an independent review. As we have mentioned, this is a very important step to ensure that investors come to market and to comfort investors that the bond is actually being used for environmentally friendly assets. There are several types of independent reviews. These can be second-party opinions or certifications, such as the case for the Climate Bond Standard. The third important element is to set up internal tracking and reporting measures. So before issuing a green bond, it is important that the issuer decide how to use the systems it already has in place to actually track the money it has raised and to be able to show investors that this money is being spent on green projects, and then to decide on how it will report to the investors and to the market in general. The first step will then be to issue the green muni bond, and this will be done through the usual means, so structuring with an underwriter and getting a credit rating. Finally, once the bond is out, it will be then the responsibility of the issuer to monitor the use of proceeds and then report annually to the investors. So several parties, we have gathered here some experiences with green city bonds, and from the testimonies of several treasurers or heads of cities and regions, we can see that green bonds are not just an innovative way to finance infrastructure, but they also, of course, make good business sense and are actually advantageous for many of these institutions. So I would like now to give the word to Daniel, who is joining us from Cape Town and will guide us through their successful first green bond issuance.
Is interesting to you. Hello? Okay. I'm hoping that this is working. Later?
Yes, Daniel, we can hear you.
Okay,
go ahead. Sorry.
Okay. So thanks everybody for attending, and I'll take you through the city's issue or green bond issue just for your information, and obviously more than happy to answer any questions which may follow. So just to give the outline of my presentation, first of all, the question of why a green bond, why did the City of Cape Town decide to issue a green bond? I'll try and address that and just give some context to that. I'll take you through the certification process, but honestly it is mostly detailed in what Diletta has just presented. Some slight nuance in the way that the City of Cape Town did it, but essentially following those steps that you showed earlier. And then I think the question that everyone wants answered is what were the benefits realized, and essentially was it worth it? So, sorry, I can't get to the next slide, it's a delay. Okay, there we go. So in terms of why we went for the green bond, as a City of Cape Town, we sort of signed up to many global compacts, C40 commitments. We have the Global Compact of Mayors, which our mayor is part of, and we also have a number of climate change or sustainability-related policies and strategies that we're trying to develop in the city and implement. So, you know, when we were looking at that, we've got projects, we're doing things, and we wanted to try and match our finance to the projects and initiatives that we're undertaking. So that was sort of the main thrust, but then there was also the idea that we wanted to demonstrate the green credentials, and I think the green bond was a really good instrument to do that and to speak to different audiences that we don't normally have a green conversation with, and both outside and inside to the internal to the city. So we want that demonstration, and the green bond certainly gave us a lot of mileage around what we're doing in the green space. Then the helping to mainstream sustainability. The green bond actually has come with a whole lot of other benefits, which I'll talk to you in the last slide, but essentially outside of the green bond process and applying the principles coming from CBI, we've helped to get sustainability or the conversations around sustainability into other parts of the organization. And then there are the normal sort of financial questions, and this is where it sort of spoke to Treasury, is trying to look at diversifying our funding mix. So we, as a city, we have our own Treasury department, and we've got a number of avenues for finance. Often it's things like hard or soft loans that we can apply for, and we have the ability to raise bonds, but generally those bonds would normally be a straight vanilla bond, and they would just be marketed to the usual people who are buying bonds. In Cape Town, in South Africa in particular, there's Regulation 28 in the Pensions Act, which talks about investors needing to invest in sustainable investments. And we thought, well, let's try and target some of those pension funds or those asset managers of pension funds and get them to invest in the City of Cape Town as a sustainable investment for them as well. And then there are a number of other investors looking for stable investments. I mean, the city, within the South African context, the city is a very stable investment in any case, and putting the green flavor on top of it just makes it that much more appealing. And obviously there was a conversation around, is this going to attract a green discount? Are we going to get a cheaper source of finance? I'll get to that in the end. And this is the process we went through, and as Diletta outlined, essentially we've gone through broadly the same steps that have been undertaken by everybody else, or that are recommended through the CBI framework. We developed our green bond framework, talking about how we would identify projects, how we would manage the proceeds, and how we would report on investments. We then, after that, we went through a process of identifying our projects, and we've got a very sophisticated project portfolio management system in the city. We went through the project definitions in the city, looked at all of the information of the thousands of projects we deliver, and started to build up a pool of projects which we felt were most closely aligned to the green bond requirements and the most likely to get through the assessments that were required further on. So we took those through to the assessment. We assessed them against standards, had that assessment reviewed by an assurance provider. The assurance provider provided that opinion, so this is the independent assurance provider. They provided that opinion to CBI, and CBI went and approved our bond based on the project and the framework that we developed. And we got our pre-issuance certificate, and we went out and we issued. We still are in the process of getting our post-issuance certificate, which we're going to get before the end of our financial year, June 2018, where the assurance provider will come back and look at the project, seeing that we have applied the framework in the way that we said that we would. In addition, and this is where the sort of variance comes in from the process, is we got an opinion from Moody's on our bond, and they rated it green bond excellent in our case. And they particularly noted the fact that we've gone through the CBI process and gone through the rigor that that involved as the reason for giving that green bond excellent rating. It is the highest green bond rating or highest rating that they give on their green bond framework. We then also, just to say, in listing our bond with the JSE, we had a transactional advisor who helped us with that issuance process. And they did all of the, essentially, they managed the process of getting the funds through the JSE, advertising the bond, speaking to investors with us and on our behalf to mobilize the market towards that, and applied the JSE's listing requirements as well. And then what we are doing is we're building into our annual report. We'll have a segment where we talk about how the proceeds of the green bond have been applied. It's worth noting, I sort of haven't mentioned it, but we identified projects based on retrospective projects, because in terms of the type of instrument that a bond is, it's a very good instrument for retrospective finance. But if we were to look prospectively, it's a little bit difficult, particularly in the municipal case, to put money into a ring-fenced fund to apply to prospective projects. So we really use this as a refinancing instrument for existing projects in the ground, so paying off other loans quicker than we would have done otherwise with bond proceeds. Slide below, there we go. So, sorry, I mentioned that here, the refinance of existing projects. We align the projects with the CBI taxonomy, assess them against the standards. That's for your information. That's all of this taxonomy information is on the Climate Bonds website, and we looked at which standards were available, and we sort of targeted projects according to those standards. In our case, we had a mix of mitigation and adaptation projects. The nature of the business of the city, we roll out projects all the time, and we had these different buckets of projects that we had on the go. Most of our projects, and it was quite interesting how it worked out this way, but most of them ended up being in relation to water losses, flood defences, development of a seawall, which was an adaptation project, as well as an efficiency energy and carbon saving project, and that was particularly to do with the retrofitting of some old pumping stations where we have put in new technology, which provides us with that mitigation, the carbon mitigation due to the reduced energy use. And then in terms of the benefits realized, the bond results, the bond that we went for was at R1 billion, which is relatively small and shrinking by the day in terms of international exchange rates. I think it works out to about $75 million. And that's a portion of the projects that we have on our books, but it's also an amount that our Treasury Department were happy that we could allocate through a bond. We have multiple finance streams coming to the city all the time, so this was just a part of the finance that we were looking for. And in terms of what it was an amortized bond where we pay the interest and the capital back every 6 months over a 10-year period. It's not the most attractive in the market. The market often wants the interest only and then the capital at the end, because the interest would come down, interest repayments would come down because of the shrinking capital burden that we've got on that bond. So it's not as certain or not as long-term, I think, as some investors would want, but it's what the city was comfortable with going with. And then in terms of the actual results, we pegged it against the R186, which is the Treasury 10-year bond in South Africa, and we got a rate of that plus 1.33, which was at the lower end of the spread that we were looking for. So our transactional advisors recommend or thought that we were going to get around 2%. I think they pegged it at about 1.3 to 2%. So we really came in below expectations in terms of what we're paying back. So it's approximately 10% in South African terms, which may for international listeners sound alarming, but there is sovereign risk built into that as well. So we were relatively comfortable with that. It was 4 times oversubscribed. So there is a strong market appetite for this bond and for a green bond, as well as investing in a city or investing in a municipality. The comparable cost, so our current cost of capital is 9.95%, so it was close to that, but our current cost of capital also has some concessionary loans in it, which sort of throw the figures way out, and we've got some large concessionary loans at well below a market rate. So we were very excited when that rate came back to 10.17, and there was lots of fanfare and lots of excitement in our Treasury Department. And in terms of the non-financial benefits, I mentioned them. We've sort of were able to demonstrate Cape Town putting its green foot forward. We have had conversations with a number of asset managers. I'd say 26 bidders. I think the final figure was actually closer. I think we had about 31 bidders on our bond, and we actually the bond was only allocated to 8 asset managers. So it was a very competitive launch. In addition, we linked this to the launch of our climate change policy, so it helped to get some momentum to show that we're not just issuing policy, we're actually doing things in the space. And I mentioned the second bullet down, there's the greening of our Treasury Department. When I was first interacting with them, they always called me the greenie, but I think they were all wearing green shirts by the end of it. They really enjoyed getting involved in seeing where the funds were going and not just raising funds for the sake of raising funds, which I think Treasury Departments sometimes feel they're stuck in. And then another very strong benefit was the awareness of the resources that are available through CBI and the standards that they've developed. And we're going to start implementing those in projects going forward, at least assessing projects against those going forward, not only to look at using them in future green bond issues, but to make sure that sustainability principles are actually embedded in projects that the city delivers. So I think that's it, and I'll obviously take some questions as they come forward, but thanks very much for listening.
Thank you very much for that, Daniel. And we have been receiving some questions through the Q&A box. Please, if you have any other ones, do write them in. Can you open the question? So I think a couple for you. First of all, thank you for your presentation. I think it's really useful to hear how it works in practice and some of the benefits you had, and how also you are starting or continuing to embed some of these, as you said, these sustainability principles to ensure that that you can actually meet the targets set in your climate and energy plans. So let me just have a look at the questions. So one participant is asking, how long did the certification process take in Cape Town, and what were the costs associated in preparing for this and then in issuing the bond?
Okay, thanks very much. So the question of how long, it actually, the process, once, if we take out all of the other things that we had to deal with, it was 18 months from essentially concept note to implementation. But there was, I think the main limiting step wasn't about the certification, it was around the timing of when we wanted to have access to the finance. So we launched in July this year, which was to tie in with our financial year. So we had to sort of phase in the finance in an appropriate time. So 18 months, the actual certification process, if you were to run it yourself, would probably take about 2 months, but I think the advice is to look at when you need the injection of capital and time it according to that. So that was our rate limiting step. And then in terms of the costs of it, I can give the figure, not that it means too much, but it was around 200,000 Rand for the assurance provider to provide the pre and post issuance assurance. That said, we did get a very good deal because I think the assurance provider was trying to understand this market and get a track record in it as well. So I've heard other quotes of around 300,000, 400,000 Rand, so twice what we paid. But just to give you some indication, and then in terms of the CBI costs for it, the actual certification costs, I think it's, Diletta, you'll actually correct me if I'm wrong, but it was 0.05 of a basis point or something, which worked out to about 10,000 Rand. So it was relatively, that side of it was relatively insignificant. The other cost,
so it's 0.1.
0.1 of the actual bond issue. So the other costs associated with just the time investment from people in the organization, there was a fair amount of that, but it was time well spent because I think it was part of the process to get people into the conversation as well.
Thank you. And so a few more questions for you. I'll maybe put 2 or 3 to you so that you can tackle them together. So, well, one, perhaps you've kind of answered this, but would you issue more green bonds after this experience? Another more technical one was, what elements did you use for selecting the verifier? And finally, one asking, did you get much feedback during the process from specific investors relating to the project?
Okay. So dealing with the first 2, more green bonds, it certainly is our stated intent. We're currently pursuing a number of finance options. We're also applying for funding through the Global Climate Fund. So there's a mix. It is certainly, when we come to issuing a new bond, which is something that we do on a regular basis, we will make sure that it is a green bond, because of not only the sort of, discount that we received on the green bond, or the perceived discount, but also the benefits that we've realized from that. The selection of the verifier, we went through our normal supply chain process where we went out to tender. When we went out to tender, we approached the sort of key auditing firms who are listed. So CBI have a list of all of them who are accredited. And that was one of the requirements that we had from the verifier. And then it just came down to an availability and cost element, or cost assessment as to who could do it. And then in terms of feedback from the market, when we undertook the roadshow, there was a lot of interest in what the city was doing. And I think this gave a lot of investors a way to converse with the city as to what we're busy investing in. So that they can, not only through the bond, but they can also start aligning some of the other investments that they're putting in. So that was very useful. I think in Cape Town's case in particular, we're going through in the middle of a water crisis. So not surprising that a lot of our projects were water related. And a lot of the investors were really asking, oh, what is Cape Town doing to make sure we deliver a water resilient city? And some of the projects in the bond portfolio were really an aspect of the answer to that. So it also gave the investors, particularly those based in Cape Town, a bit of comfort that Cape Town is thinking about all of these issues going forward as well, and it enhances the stability of the investment.
Thanks, Daniel. So then we've had a few questions, I think, just in general about structuring green bonds. So I'll take a few of those. So one is asking, for example, are there guidelines for amount of money you can raise? The bond can be as big or as small as you want. The only caveat, let's say, is that the amount of the green bond needs to equal at least the amount of green projects that have been identified. So let's say you can issue a green bond of any size, in accordance obviously with your funding needs, but it needs to be of a size that equals basically the amount of projects you are investing in. So that would be the only, and of course for the green city bonds we see in the US market very small issuances, because that's just how the market is developed. So we see even just a few tens of thousands of dollars, and then if we go obviously to some of the bigger issuers, they can get up to 1 billion even. One other question was on the ratings. So is there any difference between the ratings of green city bonds and just vanilla city bonds? And the answer here is no. So the credit rating will still be based on the ability of the issuer to repay back the loan, basically. So it will depend on the whole, let's say, financial the health of the issuer. So in this case, if the issuer is City of Cape Town and they're issuing a green bond or a vanilla bond, the credit rating will be the same if these bonds obviously are tied to their balance sheet. One other question also just generally on how to structure the green bonds was on the issuance step. So how does it work with an underwriter? So in general, then maybe, Daniel, I don't know if you want, I think you mentioned also that when you want to structure a bond, you work exactly with a structure or with an underwriter. So normally a bank or a financial institution that will actually structure the bond. I think so. Cape Town had already issued debt before, but hadn't issued for a while. So obviously there also that relationship was important. But let's say it's separate to the green aspect. And in terms of, for example, the question that was raised earlier on the time, I think it's important to note that these processes can go in parallel. So while talking to the structure and maybe to the credit rating agency about issuing the bond, in parallel, then the identification of the eligible projects, the pre-issuance certification can be carried out, so that if the issuance has to come out earlier rather than later, these processes can actually be carried out in parallel. So that's something I think quite important to note. So one question, and maybe we can both tackle this, is on about Cape Town's different projects, how they were selected, and obviously the different standards that were required by the climate bonds. So just in general, so the climate bond standard has quite specific requirements for each sector. So it is up to the issuer to select the projects that they want to include in their green bond portfolio. But then it is also up to the issuer to demonstrate to the verifier that these projects are actually meeting some of these standards. And I think, Daniel, you've mentioned, as you were selecting the projects, you had a look, I imagine, at some of these criteria, and you're also then looking at how to embed these into future projects so that you can issue actually green bonds against them and ensure that these projects are in line with what the scientific community is saying that is, Paris compliant and basically going to deliver a 2-degree pathway.
Yeah, so I think that's the benefit of the frame or the taxonomy and the standards that the CBI have developed, is that those are scientifically developed. And what we did, and it was quite a rigorous process with interrogating our projects through the project managers and through other sources of data that we have in the city, in order to get the evidence pack that we needed for each of the projects that we were submitting as part of the bond, to make sure that the projects were compliant with the standard. I think the main standard that we used was the water standard, and I think it was phase 1 standard, and there's obviously the phase 2 standard being introduced I think it will hopefully be live early next year. And then we also looked at the transport standards that have been developed, because at one stage we have included in our bond universe essentially projects that we would want to fund out of our bond, electric buses. Those haven't quite come online yet, but we've managed to at least tick all the boxes and make sure that those projects are aligned to the standards, so that when they do come online, we might be able to fund them through the bond. But I hope that, so a lot of that was interviews, requests for information from projects and project managers to make sure that there was evidence showing alignment to the standards. But even before that, we went through, as I mentioned, we've got a sort of project management system in the city where we have descriptions of all of the projects going on. And we went through that 1,000-odd projects to identify which projects fitted in with which part of the CBI taxonomy. So that's part of our framework, even we've written it into there to make sure that any projects funded from the proceeds of the bond will align to the taxonomy. So that was our first cut, and then from the taxonomy we assessed against the standards.
Thanks, Daniel. Yes, and I have to say, I mean, in conversations with other issuers, often the climate bonds taxonomy is a good place to start in terms of step 1 for issuers, i.e. in identifying eligible projects, because I think exactly the first challenge, let's say, for new issuers that come to market is actually to understand what can be included, and it's a portfolio that can be more than renewable energy, for sure. So we've had some questions as well about how these green bonds can be used to finance the urban transport sector. So what type of projects can be used to finance this? And is this the financing of mainly infrastructure? So in terms of urban transport infrastructure, green bonds to date have been mostly used to finance, obviously, mass transit public transport, both metro rail systems, bus rapid transit systems, and also light rail. So this is what we have seen mostly in terms of urban infrastructure. We see that this is a sector that can grow very fast because it's a sector that traditionally already uses bond financing. So bond financing has been used a lot by central and local governments in the past to finance, for example, rail infrastructure across the whole country normally. So this is normally something that companies are already doing. So we can see that they can very easily tap into the space. And we have seen some big issuers come to market So one of the most notable ones is the Metropolitan Transport Authority in New York that is issuing, has an 11 billion portfolio that it will issue in green bonds just against, maintenance of the New York railway, metro system. Some also of the big national rail lines. Today, actually, the Indian Railway Corporation just issued its first green bond, also certified against the climate bond standard. We've seen a few in Europe as well, such as the French national railway provider, SNCF. So we definitely see that as a growing sector, just because there is already a lot of low carbon infrastructure in place, and it's also an infrastructure that cities will look to develop as they need to move masses around, basically. One question also that we've had is who can submit the projects that fall under the bond? Is it just the public authorities or also private entities, or can it also be done through public and private partnerships? So, all entities that can issue bonds can also issue green bonds, is, let's say, the underlying principle. So in this case, it can be both municipalities, obviously those ones that can raise their own finances. Perhaps we must note that not all cities have the right, let's say under their central government legislation, to actually raise finance themselves, but those who can. Then, of course, the other public entities that may be some local public utilities, or for example the transport authorities, which normally maybe are publicly owned but actually operated in an independent manner. And it can also be, of course, private entities if there is a private railway provider, for example. We haven't yet seen bonds issued as part of public-private partnerships, but this is definitely something that we see on the agenda. So if public-private partnerships, especially in some of the emerging countries, some governments are pushing for these types of partnerships to develop large infrastructure projects, then certainly bonds can be used to refinance, and green bonds can also then be used to refinance some of the projects developed under PPPs. So that is definitely an option.
Just to add in there, I was at a conference last week with the Nigerian government, and they are looking at issuing a sovereign green bond as well, which would be for the whole country. So they've essentially, their Treasury Department have looked across all of their government departments, and they're trying to identify projects which can be refinanced through that as well. So they've sort of taking it up that level with City of Cape Town obviously operating at a municipal level.
Exactly. I think we are almost at close, but one last question for you, Daniel, maybe is how do you see that green bonds will contribute to tackling the main climate and sustainability related challenges that Cape Town is facing? I think you've mentioned a few already, but maybe you can say which areas you think particularly green bonds will help to tackle.
Well, I think at the moment there are a number of finance options, as I mentioned, available to a city, and we really need to. Green bonds are in the mix and very strongly in that mix for funding projects, particularly, and I see there's a question that we haven't answered directly around prospective rather than retrospective rather than prospective projects. I think green bonds, particularly, once we've got a project in the bank and it's been delivered, we can refinance it through green bonds. The challenge with using a green bond or any bond instrument around project finance for future is the cash comes into the city or into the organization immediately after the issuance, and if that cash isn't used quickly or put to work quickly, it sits in an account and it needs to, we need to pay back interest on that from the date of issue. So that was from the City of Cape Town. We wanted to make sure that all of the finance was already allocated. So in that case, I think bonds maybe not as useful from the City of Cape Town's perspective, not from everyone's perspective, not that useful in financing future projects. but there are other ways and means to finance future projects. What it does do, though, as I mentioned in my presentation, is it allows us to identify and deliver projects with the sight that we might want to bond these projects in the future. So bringing in the green bond principles early on into our pipeline of projects is going to be very important, and that in itself will help to deliver on the sustainability objectives that we've got as a city and align to the objectives of what CBI are trying to do in order to bring sustainable projects into reality. So they won't be financed prospectively with the bond, but they will be developed with the bond in mind in the future.
Perfect. Thank you very much. So I think we will now close the webinar. Thank you very much, Daniel, for joining us today and sharing this experience. And thank you to everyone who logged in and participated in the webinar. We will be sending the slides as well as the recording will be made available on YouTube, and we will be sending it across to all the participants. You can also do get in touch if you have any additional questions, and also do visit our website in case you want to look at any more information on the development of the global green bonds market. So thank you everyone for a great session today.
Thanks so much.